In the last session, we have learned the adjustments to the profit. In this session, let us solve this problem number 20 by using adjustments to the profit. Problem 20. X Limited purchased the business of Mr. Y as on 1/5/2018. The profits earned by Mr. Y in the last 3 years are given 18, 95 and 70. Right now, don't come to the conclusion whether simple or weighted average. Let us find the adjusted profit first and then we'll see which method is to be used. On the scrutiny of the accounts, following information was revealed. These 3 points are revealed. To cover the management cost, annual charges of 10,000 should be made. That is naturally for the purpose of valuation of goodwill. The profit for the year 2015 was reduced by 9,000. Why? On account of loss due to fire. So there is 9,000 loss due to fire. Fire insurance premium estimated is 2,000 per annum. The profit for the year 16 included a non-recurring profit of rupees 3,000. So these are the points what are being revealed. We have to take them into consideration first. Goodwill valued at 2 years purchase. Compute the value of goodwill. If you can observe, here we have 2 annual charges. One is management cost of 10,000, which is annually being paid, and a fire insurance premium of 2,000 per annum. That means every year 10,000 management cost and 2,000 fire insurance we have to pay. When you pay that every year, it becomes a recurring expense. It becomes a revenue expense. When you pay recurring expense, as we have learned, recurring expense means we pay the expenditure every year. What will happen to the profit every year? Naturally, when you pay the expenditure, profit every year will decrease. Decrease in the future profit will less. So when you start with any year, first less that 2 items. What to less? Management cost and fire insurance premium. We'll less that because every year we have to pay it. We'll less that and then we'll see is there any other adjustment for that. So first we'll prepare a statement to calculate the adjusted profit. The particulars inner and the outer column. Profit for the first year 2015 is rupees 80,000. Rupees 80,000. Now, as we have seen, there are 2 recurring expenses. One is rupees 10,000, another is rupees 2,000. Recurring will decrease the future profit. So, before we take up any other adjustment, we'll consider this. Less cost of management. What is the cost of management to be incurred? We'll take it in the inner to inner column, 10,000. Then, every year we are going to pay fire insurance premium. Insurance premium rupees 2,000. Now, before we total and take it, let us see are there any other adjustments for 2015. Check out 2000. Yes, 2015. See what is it? There is decrease in the profit 9,000 due to what? Loss due to fire. What will happen to the future profit? There is loss due to fire in 2015. Will there be loss again in 2016, 17 onwards? No. We avoid the loss in the future. That means the future profit will automatically increase. Increase in the future profit. We add. So this 9,000 we have to add. We'll add it separately. Do we have any other adjustment for 2015? No. So these are the 2 items which we have to less. First we'll finish out this. 80,000 minus 12. The total what we get here is 68,000 after subtraction. There is item 9,000 which we have to add back because that increases the future profit. Add. Loss. Loss due to fire. Rupees 9,000. 68,000 plus 9. What answer we get? We'll take it in the outer column. 77,000. See, when X is purchasing that from Mr. Y, Y had shown a profit of 80,000. But actually, what is the profit now? 77,000. That is the reason why this adjustments of profit is to be done. Let us take up the next year. 2016, 95,000 is the profit shown. Profit for the year 2016, 95,000. Every year, management cost and fire insurance premium we are paying. So every year we have to less it. Because when you pay the expenditure every year, future profit every year will decrease. So first, these two items as they are will take up. Cost of management 10,000, fire insurance premium 2,000. Before we total in the outer column, let us check out. Is there any other adjustment for the year 2016? 2000, yes. The profit for the year 16 included a non-recurring profit. Non-recurring profit means what? The profit which is earned only in this year. We are not going to receive that profit again in the next year. So when you don't receive the profit in the next year, the future profit will decrease. Decrease in the future profit will less it. So let us less it along with these two items. Non-recurring profit. The amount is rupees 3,000. 10 plus 2 plus 3, what we get is 15,000. Now, 95,000 minus 15,000, what profit is 80,000? See, Mr. Y had shown a profit of 95, but actually when you value the goodwill, the profit is how much? 80,000. This is the reason why this is to be done. Now, there is one last year, 2017. Let us record that profit first. Profit for the year 17, 70,000. The two items we have to minus because we are paying them per annum every year, which will reduce the future profits. Do we have any other adjustment for 2017? This is 15, this is 16. No more adjustments. We will take this 12,000. 70,000 minus 12,000. In the outer column, 58,000. These are the adjusted profit. Now we'll decide whether to go for simple average or for weighted average. Here, first year 77, 80,000, 58,000. Are they continuously increasing or decreasing? No. So no weighted average, it has to be simple average method. What are the steps of simple average method? Step 1, we have to find average profit. How to find? Total the profit, divide by the number of years. Step 2, goodwill. Average profit, what we get, into the number of years purchased. Let us see how to do that. Step 1 and step 2. Average profit is the step 1. Total profit, total adjusted profit, divide by number of years, and then we'll calculate goodwill. Total of the adjusted profit we have got as 2,15,000. So 2,15,000 will divide by number of years. How many years profits they have given? 3 years. So 2,15,000 divided by 3. What we get is 71,666.6 recurring. Will approximately take it as 71,667. Goodwill. Average profit that we got 71,667 multiplied by goodwill valued at 2 years purchase will multiply by 2. The value of goodwill what we get is 1,43,334 rupees. Adjustments to the profits have been done. Looking at the adjusted profit, then we decide simple or weighted average. Here the profits are not increasing nor decreasing, so it goes for simple average method. In this session, we have seen how to give effect to the adjustments to the profit by solving problem number 20. In the next session, let us solve one more problem on this adjustments to the profit. Thank you.